Okay, so I'm not in my normal location, but I want to jump on because I feel that something's changed in the UK economy, and I don't think most business owners have quite realized it yet. Now, for months, the market in general has believed that interest rates were about to fall. Business owners have been waiting for, cheaper money, easier mortgages, and I suppose, a bit of economic breathing room. But I do feel that, that whole narrative has recently just been blown apart. Energy prices seem to be surging, mortgage deals are just disappearing, and now the market itself has started to price in, the possibility of interest rates staying higher for a much longer period of time, or even potentially rising again. So, if you are a small business in the UK, this this situation at the moment matters a lot more than a lot of the commentators, should we call them, are actually talking about right now. Because when borrowing itself stays expensive, the weaker businesses start to get squeezed, and then the stronger operators and deal makers have all the chances in the world to come in and swallow them up. Okay, so if we actually look at what's actually happening at the moment, over the past week, there's been tons of different things that have started to develop, and I do think that there's been a massive shift for the UK economy. And looking forward, it's hard to predict where things are going to go because things are changing day by day. But there's a few things that I feel that people need to be aware of and really start to think about. And I'll just brush them off and think that this is all good. This is just a couple of days of madness, because we're seeing major conflicts in the Middle East. This itself, I know it's hard to really listen to the media outlets, right? Especially the mainstream media outlets, but this has disrupted, global supply chain. Of course, the oil supply route has been one, and we've recently seen that, crude oil over $100 a barrel, and God knows where that's going to end up. But we're going to start to see massive spikes in energy prices in general, and that's across the whole of Europe. Because now the reason why that makes a big difference, this isn't just a case of how is this going to affect small to medium sized businesses, but energy prices, they basically feed directly into inflation. Okay, and we've already seen the financial markets pretty much reacted immediately on this. We've seen investors start to dump UK government bonds, pushing up those yields, which has now meant borrowing costs across the entire economy start to rise. So, and that's why we're seeing lenders start to adjust as well. Within 48 hours, nearly 500 mortgage products were pulled from the market, which is the fastest withdrawal since the 2022, mini budget crisis. Now, the reason why this matters, especially for small businesses, is because, in my opinion, the Bank of England has a pretty serious problem, because inflation's still, above the target. Was it, I think, 3.7, 3.8%? Remember the inflation target's 2%, so it's almost double the target. And if energy prices do start to rise again, especially quite dramatically, then the central bank, they may not be able to cut rates again anytime soon. So it is a bit of a tricky time. What's the current base rates? For 3.75%. And, if you look, the market's now, everything's signaling to that staying up at 3.75%, or even potentially, or especially for a longer period of time, but even potentially start to rise again as well. So, the whole rate cuts are coming. That whole narrative, in my opinion, has just collapsed. And the blunt reality is, the UK economy is entering a higher for longer interest rate environment. And, there's a lot of small business owners, they're still operating like like the cheap money's coming back. And, I don't think it is. If you look at, for most of the 2010s, borrowing was just, artificially cheap. I think we've known for a long time that era's over, but the structural inflation, which is, energy, labor, geopolitics, all of these things mixed together just means that the Bank of England, they can't go back to the near zero interest rates, without without another inflation crisis. We've already seen that they haven't been very good at managing inflation. And I don't want to get into how inflation is actually calculated because that's I actually got videos on this. I got videos on this on my main channel. Okay, so you can go over there and watch those videos. But look, the truth is there's probably going to be a large number of SMEs that survived the last few years because they were still operating on some cheap debt and also some government support. But when we start to see higher interest rates, that starts to expose weak balance sheets very, very quickly. Insolvencies start to rise. And if you look historically, every single tightening cycle produces the exact same outcome. All the weak operators disappear and the strong operators acquire and consolidate. And if we look at the real operational impact, not macro theory, what actually happens on the ground, if borrowing stays expensive, the SMEs that heavily rely on bank lending, this isn't the large corporations, guys. SMEs just can't just issue bonds or access the same capital markets. So when the rates stay high, small business borrowing costs also stay high. So, just to expect to see, tougher lending criteria, higher loan margins and a lot stricter credit checks. This is just what's going to happen. And because mainstream media push the fear narrative all the time, consumer spending, even if it's for a short period of time, will tighten. Higher mortgage rates is going to mean that, the average household will have less disposable income, and we're already seeing a cost of living crisis. People haven't really come out of the back of the last one that the media pushed out there as well. Mortgage payments will rise, consumers will cut spending, and when that happens, the first sectors that usually get hit: hospitality, retail, leisure, and any non-essential service business as well. That if you look at the property market, it's been smashed by government policy and all sorts of different things over the past couple of years. But the property prices, asset prices will stall. A lot of SMEs, hold property on their balance sheet as well. So if those borrowing costs actually stay elevated, the commercial property demand weakens. You could argue it already has in a lot of locations around the UK, if not most of the UK as well. Refinancing becomes harder. We're already seeing this. This is already happening in the market, and the leveraged owners start to feel a lot of pressure as well. And that's where the distress sales begin, because you have, a lot of the small businesses that hold real estate on their balance sheet, most of their net worth is trapped in the real estate inside the business, inside the trade co. And a lot of business buyers, they don't even want the real estate. It depends what the business is, of course. Most of them, they don't even want the real estate. And it costs money to pull it out of the trade co. You need HMRC clearance, you need a specialist accountant, and there's costs associated with pulling it out of the trade co. So it creates a bit of an awkward environment and situation for people wanting to divest their business, and also buyers coming in. They're running straight into friction as well. So it's going to be a challenging time. At the end of the day, we have tons and tons of business owners that are approaching retirement. They're already struggling to exit. This is already happening, guys. But there's a massive number of UK small business owners that are already there at retirement age, past retirement age, and a lot of them have, if it's crossed their mind, they've planned to sell within the next decade. But if there's higher interest rates and it reduces buyers' leverage, there's a few things that happen. There'll be fewer buyers, valuations will drop, and the sale process just takes longer. But now for deal makers and acquisition entrepreneurs, this creates a lot of opportunity, okay? And that's where the opportunity is going to be. Unfortunately, we look at trying to create those win-wins between buyer and seller. And in times like this, you still get to that win-win, but it becomes a lot harder for the business owner that spent 2, 3, 4 decades building a business. They get to, the end of their life as a business owner or entrepreneur. They want to divest the business and, extract some liquidity out of the thing that they built all this time. And, they're affected by a credit cycle. And this is the thing, whether it's the property market or the business space, this all comes down to the availability of credit. I've said this for years, that the property market literally lives, breathes, and survives on access to credit. If the availability of credit goes, there is no property market. That's just the way it is. And this happens a lot for business owners, especially when they either want to get access to debt to grow, or they want to sell their business. And then the buyer has less access to credit. So terms need to be changed and moved around, and usually is not as favorable for the person that's selling their business. But for business buyers, this is pretty much the perfect storm. You have, thousands of business owners at retirement age that, would like to come out of their business regardless. So you have a lot more distressed owners, that, then it's not a distressed business, it's a distressed owner. They become a lot more motivated to sell, because they probably felt a little bit more comfortable a few years ago. COVID was a very tricky time. Some businesses failed, a lot of businesses failed, but a lot had their best years coming out of the back of COVID. So people have gone through this wave, these constant waves over the past couple of years with various different things going on. And then, just as they're probably getting themselves in a situation, if they thought about selling, where, it starts to looking, pretty good, right? You're thinking interest rates are looking like, the markets think that they're coming down. Inflation was easing. I wouldn't say we've had a ton of economic growth, but the environment started to become a little bit more attractive to sell your business. And then everything else starts to happen, and then that environment changes very, very quickly. Now, who's to say what's going to happen, over the next, months, 2 months, 3 months? We don't know, okay? But for me, I feel that it's my job with this channel, and the reason why I started this channel is to keep you up to date. I haven't been the best at it over the past couple of weeks. I did have some time away working on some bits, but now I need to get a lot more consistent, because I want to make sure that anything that happens, I can at least give my opinion on, okay? But look, the environment for business buyers and deal makers, it's looking a lot more attractive for deal makers, okay? If you're selling your business, not so much. But that's why it's important that if you are selling your business and you want to take some chips off the table, all the chips off the table, it's important that that business goes to the person that's suited best, someone that cares, spent time speaking to you, building that rapport, and the person you think is the safe pair of hands, okay? Well, look, I feel that we're probably going to see quite a lot of fragmented industries starting, they're going to start consolidating, okay? So people think that the buyer just, wants to have like the business owner's pants down, and they want to steal the business from them. That doesn't work. When you actually look at deal structure, that's just not how it works. If that happens, there's going to be a transition period. There's going to be tribal knowledge that needs to be extracted from a business owner's mind through that transition period. It's going to be culture in the business. There's a lot of things to take into consideration. You have to get your head out the spreadsheet, okay? So if you've stole the business from somebody, how inclined are they going to be to help you through that transition period, okay? So these are some of the things that I think are common misconceptions when it comes to business buyers versus sellers as well. But yeah, look, the UK economy, isn't about to crash, but I do believe that it's about to separate the stronger operators and deal makers from the weaker ones. Higher borrowing costs. I do feel that that's going to squeeze thousands of small businesses. A lot of them were barely profitable to begin with. So look, the entrepreneurs that understand this shift early, they're not going to be the ones that are struggling to survive. They'll be the ones that are probably going to be, quietly buying up their competitors. And 5 years from now, those acquisitions are going to look insanely cheap.